most people are not going to do the work that's needed for anything else. Like I know
Mhm.
you and what you're not going to look at this stock again. But a lot of people come to investing and they're not necessarily sure where they want to go. They have very vague ideas of what should be happening. The thing about portfolio management more than anything is the decisions you make, and you have to how often you make them and your willingness to make them.
There are times where I've made a decision. There's times where I don't get it right, and maybe if I had stayed in that thing, you know, I would have just got my gain.
Hi, everyone. My name is Theon Sims, and welcome to the Limitless podcast. Joining us, as always, is your co-host, Dr. Matthew Preston. Hail up the people, and Matthew.
Hey, guys, what's good?
Excellent. And now we have, Danhai is not new to Limitless at all, right? Big up, Danhai. Welcome back to the show.
That's good to be back.
Yeah, really good to be back. So just a little background on Danhai for those of you who don't know. So Danhai actually did our first YouTube video, right, Preston? I think that was our first video on YouTube, or was the first video.
Or video podcast.
Video podcast, because I think Shanice was our first video on, but it wasn't a video, it was not recording at the time, you know. But a little background on Danhai. So he is a FSC licensed individual investment advisor.
What's the FSC?
The
Financial Services Commission.
Commission. Excellent, right? He was formerly a compliance officer at VMwell, then almost 3 years in compliance and risk at Mayberry Investments. You know, Campion grad, Bloomberg Market Concept certified, now self-employed, running a portfolio advisory consultations. Today, we'll unpack some of the things like how he defines risk, how he builds and, shapes or helps to defend or just speak about portfolios, and maybe what he sees on the JSE through the rest of the year and 2026 and beyond. So welcome, Danhai. Welcome back to the show. Thank you for being here.
Good to be back, and thanks for having me.
Awesome.
So we'll leave a link to Danhai's, his advisory page in the description. But just to clarify, none of what we speak about here is investment advice. If you really and truly want investment advice, link him one away. Click that link.
You have to pay the man.
Yeah, you have to pay the man. Right now, this is all just entertainment purposes and so on. So just to get that clear with everybody. But yeah. So, Danhai, how's it been?
It's been good.
I see you guys start back Brick Talk. You and Randy, which is,
I think it's long overdue.
Overdue. How you feeling?
I love it. I think I said on the podcast we just started back, it was, we keep saying, boy, I want certain conversations to be happening in the space. And very often the conversations are just between me and Randy. So if nobody is having them, then we kind of have to do it, right? If we can't rely on somebody else to have the conversation you want to have. So have to come back, talk, and have people join us and have Brick Talk, right? So
love that. Yeah.
That's
now
good.
Well, 2 years, people say that's crazy.
It's
I thought it was shorter. I trust me, I keep
Time
hearing
flies.
you guys need to come back. I went to Trinidad, and the guy that was driving me around was asking me about the podcast I used to do with the Virgin. And I was shocked.
Nice. International.
So if now go start back, right? So that was a crazy thing to me. Say, you really need to come back.
Yeah. I mean, we have a couple of fans in Trinidad too. I realize when we look at the analytics, there are people that listen to our podcast.
They're very invested in Jamaican market. They have some.
Yeah.
I know people that are Trinidadian that keep up with the Jamaican market more than top people out here that you think are in the market. They can tell you things about this market. They're on the top of the news, and it blows my mind. I thought some of them were Jamaican, the way they're talking about things, until they asked certain questions like, "Oh wait, you're Trinidadian." Yeah.
Nice.
No, that's good. That bodes well for our market, to be honest. We love everybody on the market. Hey, Trinidad, anybody else, come and invest in Jamaican stocks, because Yeah, I mean, I think our market is a bit more active than the
I think not
Trinidadian
bit. It's
market.
a
More
lot
than
more.
a bit.
They
Trying to be
tell you,
modest.
oh boy, the market boring. To them, like we think, whole of a cultural point, Jamaican market is to a lot of Jamaicans. Like, oh, yo, barely any Jamaicans that's actually investing. You know, we want them to be more, and we talk about how much more we want to bring in. They say it's just worse. Like, there's no conversation around the market anywhere. We talk about the Trinidad market to a wider scale than I think they do. Yeah.
That's
So, you
I
know, like
could say
Jamaica
that.
is a rich man thing to in a lot of people's minds. Imagine there. Yeah.
They need, I guess, people in the space like just like how we had Kalila to help develop the space and bring on
Limitless. Like,
yeah.
Yeah,
they need
they need
people
a
looking at it.
limitless.
Yeah,
That's
yeah.
true.
So one of the things that Theon said was that you are I think he said independent financial advisor, right? That's the correct term.
Independent investment advisor.
Okay, independent. So what is it? What exactly do you mean, like when it's dependent versus independent?
Right. There's no dependent, so typically you find it's the banks, the houses, the investment houses. I'm not tied to any of them. So I'm an individual, so individual investment advisor. So it's not independent. Really. I say independent because I'm not tied to anybody that people typically know. But individual advisor versus the institutions that you know of, the VM Wells and the Mayberries. So
How
me
many?
alone, I do.
Do you know how
advisory.
many?
I think it's
Individual.
six.
It's 6. When I started, there was 5, and one more person joined after. But
Oh,
I think
nice.
it's 6 right now. So me and 5 other people
In
are
the entire island.
entire island. Yeah.
That's crazy. That's an achievement. Big up.
So, I all know, but I can still say I'm the youngest one, I believe.
Yeah. Like,
Love
how did
that.
you even decide on becoming a financial advisor? Was it always in the plan? Like, was there some story that changed you?
No, I think not necessarily always in the plan. The plan has changed many times. It's growing up, and like, even like after school, I didn't think it was. I didn't think of being in the industry in the way I think I am now. When I left school, I did actuarial science. So every month, very tied to the industry, leaning more on the insurance side for a lot of people. But you know, some marriage there. And when my first job was at VML, as you said, it was in the industry, investments. It wasn't insurance directly, but it wasn't insurance. But you know, insurance was a heavy investment component. So I went over that side. I'd heard about the stock market from friends who were investing before. A doctor friend investing scholarship money, and a teacher of mine, she used to use her investments as examples for school for classes, and she was on the actuarial part as well. Big up Kimbo as well. And I used to ask her about it, and he was talking to me about it. So I just need to hear two of them saying the same things. So it was, yo, that investment thing. So I then saw, oh, it's a path within the actuarial field that I can go into. So I applied for VMwell, took me another summer job, kept me after. And compliance was very tight to a lot of things I found interesting. And my boss at the time, she also did actuarial science. So she came over doing actuarial science from the pension side of VM. So she's actually the CEO of VM Pensions right now. So it was very married, you know, a lot of ways. And then so it just kept, the actuarial side kept dragging me further into the investments. And then I said, one day said, do I want to sit down and do actuarial exams and be an actuary? And I said, no. I was found and further, I got deeper into actual personal investing on the stock market. So just further and further there, I kept saying, okay, that's something I want to do more and more, maybe professionally. I kept saying maybe professionally. So, and then more I got exposed to the actual industry. I said, yeah, I do want to do something here professionally. I got very interested in just managing investments. The compliance side, I think it was that it taught me a lot around how investments actually work and like the framework of it and all that. So I started looking into laws, started looking into FSC regulations and all that. So then that kind of guided me to say, all right, what options were. And it was either, okay, manage within the houses and their structure. Do I like that necessarily? Not necessarily. I don't think it really pushes me in a certain direction in the way I like. You start investing, you start seeing more of like Warren Buffett's and what they do. Like
Yeah.
the actual thing they do, actual managing money. And, I don't think within the whole structure there is a strong demand for people in that way. Like, you kind of are guided by the host more than you're guided by what the client. Don't say it like that. The
No, I
host
get you.
the hosts have
Because
certain ideas of how
yeah,
the client should be managed and all of that.
Mhm.
And so
it's
if you go
not
to a pension,
always
it's not
tailored
it's
to
not always
them.
tailored directly to thing. You have advisors at the houses that are that, but they're not
Mhm.
necessarily doing that. You find that they're very tied to sales more than to thing there. So it just
Mhm.
didn't pull me the way I wanted it to. And I think I like doing things from this angle more. Actually, they're looking at what I think should happen or whatever, and what the client and talk directly to the client and their portfolio. I think in a way that not necessarily they're at the houses. So that's what pulled me more than anything to that. So
Well,
I looked at my
I
options. What
think.
can I be doing in that space? How I can do it, and investment advisor was a path. So yeah.
Well, I think with your unique skill sets, like not only just having the actuarial sciences background, but working in under a brokerage house, working in different areas. Now I hear, like when I just started investing, you and Randy were one of the probably the only people I used to listen to in terms of money talk and so on. Then I started listening to Kalila and so on, but it was really you guys and hearing how even the research, because that's something that they don't necessarily teach you,
Nobody
or
teaches you that.
even
It's you go to a house and do you have that or not, and do you have it to
exactly
what the houses want from you or not.
precisely. And even when I go in, so when I first went into our brokerage house, the products I was pushed, was based on my risk profile. But I said, hey, I'm risky, but just got the same blue chip stocks that I'm pretty sure they told everybody, by Grace, by Seprod, by this, that, by NCB at the time. NCB was like almost 200, so for me, it felt very, they're getting the information from people that probably do some research or so on, and they're just trying to sell the product.
There's a decentralized thing. So they have a research team that does research on each stock, and then the advisors get that research and do the advisors. Then it's the agreement between the advisor and the research team, and then that goes across. And so sometimes the houses have products more than are you an individual stock investor. Maybe sometimes the product works for somebody better, but I just didn't find that it was necessarily that's how we push it. It's we're doing this and we're doing this and nothing else. You will go into a house and you want to be an individual stock investor, and they try to veer you away from that. It feels like like, oh, maybe you shouldn't, and they tell you it's risky, but they don't give any color on that. So it's not a marriage of okay, how risky are you willing to be, and what's actually going on in your life that you need, the risk that you need to take, what kind of goals you have around your money. It's cookie cutter. You're doing this, then you probably should go to that side. You probably go to that unit trust or this unit trust or maybe bonds, maybe stock. It's not. I don't think it necessarily as tailored
customized
as it should be. Yeah.
I get that.
Okay.
So then, could you name one belief that most advisors hold that you may, I don't know, disagree with, and why?
Disagree with. I probably could. Questions like this, then it's hard for me to think of in the moment.
That's fair. I mean, we can come back to it if you can't.
That's fine. I'm trying to think of it. The one belief most advisors hold. I typically don't know. I don't necessarily know a lot of advisors that are in the investments are in investments as strongly as I think I am. Like the thing it's typically a sales job primarily. So they have targets around sales and whatever, and then that drives them. So you really do have a different. There's no strong, consistent ideology from advisors I've found. There's no your advisors generally think like this around investments. It's very different people, and then they have different approaches.
Okay.
Maybe I was too close to them to see it like that. maybe if I to see it otherwise, but maybe if I was a bit distant, I would probably think of it otherwise. Yeah.
Okay, fair. Okay, fair. And now you've reached this point now, on your journey where you gave a lot of background and so on, but what was that first money moment that clicked for you? You know, that what was it that really said, all right, investments? Because you said you had friends that, you know, pushed the investments and so on, but was it a particular stock that got you into, like, properly into investing? What was that? Because I think every investor has an aha moment where they're investing, and whether it's a gain, whether it's this money was used to pay off something special grabbed them and hooked them to the market.
Almost certainly again. Let me just open my
do,
J Trader.
do you remember what that first one was?
Open my J Trader. I'm sure it
Because
was
I feel like
pretty early in the
every
game for
investor
me.
knows.
All right.
Yeah. Because I know Matthew probably knows what that is. For me, I knew it was my first ever stock, and I talk about it all the time. It was Wigton, and that doubling in 2 months, and me selling in class as a mid student.
My first investment did not go well, actually, but I didn't even think of it like that. In terms of go well, because I was fully going with learning this thing. I didn't expect that it would. You know, I didn't even know at the time what the market could really do. My first stock was Caribbean. No, it was Cable and Wireless, when it was listed as Cable and Wireless. And I did the thing half of people do wrong. You hear somebody talk about that thing, so you're running on the thing and it's supposed to work out. And it didn't work like that because the person wasn't even speaking about it in a way that, you know, where they're saying the thing I thought they were saying. They were just saying, they were just having a conversation. And in fact, they were having a conversation on what they did on Cable and Wireless previously. And I thought, okay, maybe that can go on for me. Something, you know? It did not go on.
Oh boy.
It did not go on. Oh gosh. Fair.
About Cable and Wireless was
that was it.
How much percent you lost?
It wasn't even like this thing that I bought it at 157. Let me tell you where I sold it. There is a fail.
Yeah, I think we've all had those experiences.
I sold it at 111.
How much is that in 20-25% or something?
I think the saving grace was I didn't have a lot of money to be investing at the time. So it was there's even more to that, to the starting story. Somebody, my godfather is big on investments from a long time. I didn't even know until I was in the field and whatever myself. So my pops one day, you know, I want to start investing money, and my money at the time wasn't going anywhere in terms of it was a summer job that became a job, and the salary was really small. And I saved up $10,000 eventually, right? And he said, all right, we get another. So I spoke to my godfather, and he gave me another $10,000. So when I spoke to my father about it, he told me my godfather had done with investments back in the past, stock market directly. He worked at NCB for a long time, and it wasn't directly investments. He was working in the IT department, and the IT setting up their digital systems and whatever. And he eventually bought a house with his investments from the stock market. I said, when my father told me, I said, "Oh, and do that."
Yeah.
So I said, well, must talk to him. And he said, "Yeah, man. All right, cool." Yeah, spoke to him and said, "Yeah," and just run me through just how you think about this thing. You're going to it, and gave me another 10,000. So my first money was $20,000 to invest on the market. 10 from me and 10 from him, and that went to Cable and Wireless at a loss.
Ooh.
Wow.
You know, a lot of people give up after that. Like that turned them off completely.
Just say, "Oh, I'm blasted. I'm never gonna do it."
I think differently around certain things. So it wasn't that for me at all. I know it can work because that's just math. You can look at the market and see it working for other people. So it's just, how do I become one of those people? How do I find the thing that's going to work? Right? So I did this thing this way. Okay, clearly, just hearing a piece of a conversation and you don't really understand how this thing works is not going to get you somewhere, because then you will do it again. You hear the guy talk again and hope he's right the next time, right? So that just won't work. So very quickly then started changing up. Actually, at the time I just met Randy, he was one of the people talking about Cable at the time. He was speaking about a previous trade he'd done, So I thought, oh, KWI must go up because they go up already. Some foolishness of that doesn't make sense actually. But
Yeah.
so that may have been what I was thinking, or I had put some, or I think really at the time the conversation they were having, I just didn't understand exactly the context of it. So I thought they were probably saying, yeah, some can go on, because of the work. Which is funny. I think people even made trades at the point I had exited Cable and Wires, because Cable and Wires to me is what a lot of people are looking at right now. The monthly move where the thing go up and down. But then it was a very volatile stock. So at the point I had exited, I'm sure people were buying to get back where I had bought in very shortly after. So I was jumping onto the next leg of the race. I was going where people were exiting and sending back to them when it was down. Right. So yeah, that was a big moment for me. But I think one of the moments for me where profit was Jetcon. Way back in the day. It was actually my second stock. And Jetcon was nice then. It was before the stock splits and all of that, and I had heard a different conversation around Jetcon. But this time I wasn't going to run in and be the same guy. I'd really say, all right, I'm open the reports, read them, figure out what's going on, and do I actually think this thing is going to be making more money? And do I think people around the market will react to it making more money? And worked out. Stock split also was announced around the time, and I think that was something good for me. So yeah, Jetcon was very.
Remember the percent?
I'd have to find it.
What do you think drove that? Yeah.
Jetcon was making a lot more money. They were in a lot of upward profit. I remember one of the conversations I had at the time was, yo, a lot of them small cars, there were a lot of girls that just done university buying the small cars, the demos, them, and Jetcon they were known for that. So it was something, and my thought around it also was, I don't say if you're in university, I know a lot of people that are buying these kind of cars, and somebody will leave university next year and then the year after. So they're in a strong market for it. It's not like, boy, this one time thing that happened. So that was there. Consistency. And then I'd also seen them consider stock split. I was buying Jetcon at $15. Imagine that. And this was before stock split times.
So what do you remember the split ratio?
I'd have to find that. But seen selling it here for $3.80. This was in 2017.
Yeah, I'm looking at the price rise now. This is Jetcon back in 2017, and I guess this is the split adjusted prices, so you're not going to the $15 that Danhai bought it for. But yeah, I'm looking in December 2016, it was trading at like $1.96, almost $2, running up to $4.83 dividend paid, running up to $5.66 right before the stock split at $6.10. Yeah, this looks like crazy, right?
It's quite a lot of things at the time for me. I can't say it was what is one thing that happened, because I was doing. I was caring more about investing than work. It was a big deal for me. But I remember one of the big ones for me as well was Epley. Epley was that stock you couldn't get. It was a high price junior market and not much trades. You see, you barely get any. And then they said stock split. That was everything, right? It was like, oh my god, they were stock split, and can you even get Epley shares? I got Epley shares.
Hold on, so this was, you bought it post split or a pre-split, but post the announcement?
No,
we had owned it pre.
The market was slower than so it was things happen. The time between reaction, it's funny. The market is still slow in my opinion, but the time between the thing happening and the news coming out and then the trades going through, people weren't using JTrader by then. By the way, I consider myself one of JTrader pioneers. Theon probably know about JTrader, and he probably saw some of that where people were stuck on the JMB and the money line. In that group we had, so I remember Theon, because Theon was in school, so it was big to me. I like my brethren that's in school caring about stock market. So this young youth care about the stock market, and so it was a big deal for me. Oh yeah, man, need to go far, and here he is now, right? But
real.
So people weren't as agile then. So news would come out that you consider big, and nobody even knows about it for a couple of days.
Miss, I'd love that.
And I was in a house, I was at investment house. So sometimes I'm talking about something, and the people whose job it is to know this, it was new to them, and they weren't go check it.
Yeah,
it was big, man. So people weren't in JTrader. It was like 3 or 4 houses that were actually I had JTrader access, and I was just looking to working at one of them, and a Bridget that's really cared about trading that day. Probably still does. Leo Von Dillon. He was a trader at VM at the time, and he just said you can try the JTrader platform, because I was signing up for the account, and so you can try the JTrader platform. You can do the things yourself, because he was also actually a graduate. So I was talking to him, and I hear him and another guy, Darren, he's at Barita now. They used to talk about stocks. They were both the traders, and they used to talk about stocks to each other at the table in lunch, and it wasn't a large conversation. A lot of people joining that. So in my mind, I need to talking to these guys, because who else have they talk to here? You can talk to this. You don't egg my magic to everybody else. So then the day trader thing, and I did. And I even spoke on Brick Talk recently. When I put JTrader screenshot in group that queues were available, it was a big deal. People were like, "How we can actually see that?" Because how we'd see trades before was the sliding ticker on JSC's website. You see if something trades at this price, you'd have to wait until it slides across. So it's just if the first stock, say if we're 138 traded, you'd see it slide, and then when it comes back around to it, so the whole market is sliding, you see the prices and the trades, the last trades are sliding. Or you go in the JC's app and you see it, and you have to refresh app continuously. So you're not seeing the trades real time, but JTrader allows that. So when news comes out, I could be in the queues and have time, and I can at the same time and buy something, and so you could be very agile in a way the rest of the market wasn't. Right? So I think, like you say, Pioneer JTrader, I spoke about that a lot to so much people. We and earnings season were on evangelism, telling people, yeah man, do the JTrader because it's so good, and people are using it more and more and more. I even remember.
Big up Marlene Street Forest for that, because we had a conversation with her, and the challenges that she faced in even bringing JTrader to getting it about and so on, and bringing it to the market. Yeah, exactly.
I remember bringing it up in a staff meeting, because they were saying, anybody have, I know the usual staff meeting, in my opinion, it's what people do. This is what people in corporate do. Oh, anybody have any ideas we can push our thing and make more money? You should bring it to us. So I said, I'm in a group of people that are actually caring about invest, hearing from a retail side. And the JTrader thing we have here, it's a game changer, and we're not pushing it at all. And I think I was pushed to the side, and I'm like, okay, cool. Like a cool story. Right?
They didn't really care.
Retail, we don't care about that. We're not, you are coming talking about little money.
Right? Little bit of money, yeah.
Shut your mouth with a little bit of money.
Same so. So more and more and more, I saw JTrader really blow up. And here we are now, where it is the way to trade.
It's crazy how a lot of these technological advancements, once you get on the train early, there's so much profit to be made, I said the same thing about even, using AI, because how many people are even using AI right now and using it for the stock market? I know Preston and I use it very heavily, right? We don't necessarily have a bot that trades for us or anything like that. Hope maybe one day we can hope to do something like that, but that's not even in the realm of the things that I use AI now for. But in terms of the research and those kind of stuff, so I think it literally, any little technological advancement I hear about, or anybody that talks about stocks, like you and your brethren them, the reason I got to know you, and because I did grower, and I knew grower through some other, I think it's Preston, Shaq. It was Shaq. Preston's very, very close friend. My brethren too. And Shaq just invited me into this group with a bunch of the finance man, them like Kirk and Justin and
Shaq,
and all of them.
Time.
And them man, they are the reason why I started investing, and then I got to know about. I was putting my ear to the ground, because people are telling me they're making so much money from this. I need to know, how the hell am I going to do the same thing? How? Because if in my opinion, if you can throw money, at the time people used to just throw money on stocks and just make money. So I'm like, if there is a way to actually meds to actually get, if there's a proper
It's
path
like
to
approach
profit,
it systematically.
Yep.
yeah, if there's a exactly if I can build my systems to help me get consistent profits, I want to learn that, and I want to be first to learn that. And at that point in time, I was searching, I was calling other doctors. Well, at the time we were all med students too. I wrote Matthew in. I tried to rope in so many of my friends. I have a friend named Wasime. We went to Stocks on the Rocks once and so on, but nobody else
There's
would
a
take
lot
it
of
up.
roping. I find that's a very common thing where you try to rope in so much people and only so
Yeah.
much care. I
Yeah.
have friends that I tried to get into it from. And this is when I started in peak IPO time. So I'm talking about Jetcon and whatever. Jetcon had recently it was after I jumped on. But SOS and eSale came very short. I'm seeing the trades right now. I'm selling eSale for $4.80. I'm selling SOS for $6. And this is an IPO. These are SOS IPO at $2.
Wow.
eSale IPO at $1.50.
And you could get units in probably at that time.
I could get units in just applying to the IPO. And
Nice.
at the time, I remember how early it was. The circuit breaker rule was not understood.
I see.
So I saw the circuit breaker rule in actual action because I could see it on JTrader. Everybody was hearing about things halting and cussing about on Twitter, and when I just said, "But that's a rule. Yeah, it's not something that's people are saying it's wrong and they're cussing about it, free it up." But I'm like, no, it works a certain way. So how does it work? And then I put brain to it anyway. So I figured out early. I call it Chinese thing where everybody says, "Oh, buy at $1 thing. IPOs at $1, you buy 160 up and da 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 da." I engineered that from just how does the rule work. So if I need to put in an order at this amount because if I need to trade it, I know that at the end of the day, you can only trade to a certain range. And tomorrow morning, it's very unlikely that I'll be the first guy that can put in an order in the queue in the morning. So what I need to do, I need to figure out the range, and based on today, I need to know what can be left in the queue. I'm the first guy in the queue tomorrow morning. I'll be available to get units.
Yeah.
So I had to match that up. And I remember me and Randy doing that. It was, all right, what tomorrow thing there? What tomorrow going to be? What needs to happen? Put in the orders, lock it off tomorrow morning. When everybody starts sending them orders because they just figure out the range when JSC tells you, or orders were there already.
Yeah.
Yeah.
So
all off the rules.
That was just, it was there. It was in front of it. Everybody else wants it. They want to, so you don't want to be like, oh, yo, I want to know what the thing is without figuring out what the thing is.
Yeah.
And if it doesn't work in my favor, it's something is wrong. It's a problem.
Yeah.
But it's circuit breaker rule because, supposed to work out for me, but I figured out how it can work for me. And then that was it. I remember points where that became a harder thing because everybody starts learning about this thing. And blame myself, I chat too much. It's me give people, go on earnings season and telling people how this thing work and run their each class. But so then these things become very easy for everybody to do. So it's not a given, right?
Yeah.
To the point now where IPO became so lucrative that you couldn't apply to an IPO and get the units anymore, bro.
Yeah.
I remember
So you have
main
to
event.
fight it out.
I know I applied to main event because it was out and I took the lukewarm sentiment of some people as oh yeah man, it's not gonna be the great thing. It's not gonna be the great IPO. Main event did bingo, people made a lot of money there, and that's also our listeners like. Maybe you talking, maybe you don't really know. As much as you know, as much as you sound like you know whatever, you don't really. And there was people in the industry, I heard them talking about it, and they were like, no, that's not a thing there. That's not going to well. We could company or just do this XYZ thing. And that was a lot. You hear a lot of that kind of thing. Usually, like, junior market was discarded as. I remember being in an elevator with two executives, and them say, "You buy junior market stock?" To each other, they're like, "Why would I?" I was like, well, we sell these. What do you mean?
No. That's just for the clients. That's just for the clients.
We don't buy junior market stock. We do junior market stock. So you say hear about it. And for us to reach this point, no. There's a lot of that going on where so you hear that kind of thing. Imagine you go as a client in there and your money is at quote unquote junior market level, you're never going to get a recommendation.
That's so true.
I think that
Jeez.
has changed a lot where people, consider it strong as a market on its own now. But before, there was a strong stigma around it. So we talk about how Mayberry came and listed a lot of these companies. I remember people talking about Mayberry like little man thing. Like,
Yeah.
well, it makes expensive because of the $1 million unit, $1 million limit or whatever. But that be a junior market company them list. These are companies who not even people. These are from people from companies who aren't even listing main market companies. We're talking about Mayberry like monkey money people there because
like it's a small thing. Yeah, have a big up Mayberry, because they're
that made me
pioneers of
want to
that
work at
junior
Mayberry.
market.
When I was looking at it, I was like, oh wait, these guys are, and I checked what they were doing. It's like, these guys are bringing this market forward. Like, they bring life into the overall market, not just the main market, because of the other listing. And it just like all the things that we're doing just seem like the agile part of the market. You hear about you hear in investing, people talk about Warren Buffett and what he did, and Carl Icahn and what he did, and they were the guys who actually came to the market and said, we as a house, what can we be doing? And it seemed like the houses were, you just felt all like the houses were just, we facilitate things. We don't take an active part in this. So Mayberry was, after that. So, yeah.
Yeah, big up Mayberry, yo. Big up. Like, you just think about how much they've done for the stock exchange on a whole, Jamaica on a whole. Yeah.
I remember when SVL was SVL. Remember SVL was a little stock with $2 something price.
No, is it like, it's like 20 now?
Yes, sir. And I remember seeing the Mayberry moves around that, and I was like, oh, wow.
Yeah, because there was like a dispute over the ownership and...
I don't know the ownership. It was some people within a large group were split in the group, and some were leaving and some want to sell.
These are Trinis? These are the...
Sure.
I think
people,
so.
There's somewhat Trinidad based. And so I'm saying everything I'm saying in my piece. So these guys in the group and I'm out with the money. And Mayberry took an active part of that. They did the whole deal and they took some of the shares on themselves. And then big board changes, and I remember I think it was Chris Berry or Gary Gary saying another $1 billion can come in profit from this thing, come to the bottom line. And people were laughing at it like, how? By end of the year, another $1 billion came to the bottom line.
Wow.
and they were giving out dividends regularly and special dividends. We make way more money than we thought. So give me special dividends too. And and that was something, if you were there for it, you have some nice prices on SVL, big rise, and some good money to be made at the time.
Yeah, no.
If you're just looking at this happening, and a lot of it was, this can't work. And you have to go figure out, okay, I hear that guy saying that him big degree and him sound like him know him talk about, but can it work?
Yeah, truly.
Yeah.
I question everything now, and I think that's the hallmark. Or you need to be a good investor. You need to be questioning everything. Like, you need to question why are these people? Yeah, like because why am I investing this?
Yeah.
Why are these people speaking so negatively about it? It's just like the whys. Like you always want to get to. I think there's a rule called
why is my favorite word.
Yeah, it's like the 5 whys.
You don't stop asking why. Okay, this thing can happen. Why? And as an investor, if you stop asking yourself a lot of things, then you realize you don't be a lot of the problems of it. With you're looking at your portfolio, why am I still doing that thing? Why am I not looking at something else? I think this thing can happen, but why? And you test it, test it. You'll never actually have fully. If you're at the point where you feel 100% correct about something, then God go with you. Because I don't think that I'm not. It's been a long time since I felt that feeling, and I don't think that it's not a. It's. I think no. I see like going like to the risk point. That's how I see things generally. No, like, nothing is like 100% can work.
Even though it's like 90-95%, it's like you're not really gonna get to that 5%.
Because you're actually in the area of I don't actually know. Like there's always a point at which you don't know more. There's something else you just don't know about. When you look at it and you say, okay, what can go wrong here? You can eliminate that risk as much as possible. You can get up and say, oh boy, okay, I can know XYZ about that thing, but there's never going to be a point where I know, sir, they're going to pay XYZ in dividends directly. I can look at the results and I can say, boy, maybe whatever. I don't know if the board can get up and say, boy, we just don't pay a dividend this time because we want to keep the money in the house. There's always this other thing that you just don't actually know, and you're investing against. All right, I feel certain about this to this degree, and what's my point of certainty where I'm comfortable investing? If I'm a 60% investor where I know 60%, I know I'm 60% certain of this thing, and that's the point I'm comfortable investing, fine. But another man might be at 75. You're never going to get to that point. And there's a lot of things. Everybody that sounds like them know it directly, it very often takes one question and we have to break that all the time. Somebody comes and they're so certain about something happening, and they're so certain about the thing they're invested in, and you ask them one thing and they're like, oh, I don't know that, And you can hear the confidence crumble because it's and as much as it sounds bad, it should be. You should when you stop watching your own back, you have a problem, right?
Exactly. Yeah. You guys speak about stress testing the theory, and you're literally just stress testing it on in real life. And if certain questions make you feel that uncomfortable or so on, then you have to reevaluate, because you have to, at the end of the day, is your money investing.
The money.
So if our next man is asking you about your investment, and maybe you didn't do the research or so, there's no reason for you to feel a certain way about it. Because for me, it's like it's a lesson learned. It's like, all right,
feelings though, bro.
Yeah,
and it should. It's money. It's something very personal to your livelihood and everything. So the feelings, it's just a natural part. We often hear about big investors and they tell you, or even small investors, like the Forex man, don't go in there with emotions. I like that, tell my boss. When you see your portfolio dip, you feel it. When you see your portfolio go up, you're happy. That's why you're talking like that when it's good. There's no point where you just remove from the emotions. It's just how I manage that. How does this thing actually affect me? And can I go through this thing? And it's like, if you have a bad experience with your portfolio, you have a bad return on something, and that mash up your life in terms of how your mental state and how you think about it, and maybe you should probably evaluate how you deal with that and the kind of investor you are. Maybe you're not as risky as you thought you were, right?
Yeah.
I think I go through that so often, and your clients and whatever. A lot of people tell you how risk averse they aren't, how much risk they're willing to take on. And I think just saying it don't mean you know it, right?
Yeah.
Sometimes people have never been in a situation before, so they can't read to you, or the evaluation of themselves at that point is just not 100. They don't really actually get that point. They're not actually at the point they think they are in that.
So is it, for example, someone is saying they want they're coming to you for like a really high return. They're like saying,
that very often. Where somebody says like, they want
200% in 1 year.
They say a really high return in a short time. And you can do so much. You can tell them, you want to bow them down, bro. You tell them that probably don't work out, or you tell them how risky it is and kind of how much money you can lose and all that. And no, I came here and tell you what I wanted, so to give them what I want. That kind of thing. Right? So
what do you think is the most percent in like the shortest time period that you think someone has asked you in a session that comes to you, like 300% in 1 month?
Yeah, I've heard that. Those kind of
300% in 1 month.
Yes, you hear that
really,
kind of thing. And I even think like people hear you speak about scenarios in a way. Like, so you've been there where you've had that kind of return in a short time. When you don't speak of it like, I'm going, okay, what am I doing this month? 300% I'm going for. I'm going for 10 this month. But this thing is happening that I know that can do that for me, and I'm going for it. Right? It's never really, if you're that guy where you go for 300% every month and get it, then power to you. I don't have met that guy yet.
Real.
Yeah.
Yeah,
But people hear experiences and they take it as, okay, so that's what market can do for me. Let me go for it.
So how do you temper expectations then?
That's
because you say you dial it down.
Oh yeah, man. I even sometimes feel like, boy, I kind of have to scare you because
Yeah.
I cannot have you thinking,
This is the
that's
norm.
something given. And even like it feels sometimes like, yo, boy, I try temper, but you just not take it.
Yeah.
Right? Or I get the opposite of, you try help them through it in terms of managing from an active side on their side, what they should be looking out for, what they should be doing to see certain prices, looking for the queue, set an alert and whatever. And I think that's sometimes like too far out of somebody's routine that they don't necessarily incorporate that. Yeah? So just go for the thing and then hell or high water.
Yeah. Because I can imagine if somebody's asking for even like 100% in say 3 months, even that, to me, I mean, a lot of those expectations may not be realistic, right?
Yeah, you say I think that's weird thing. You keep brushing on my wrist point. It's not even unrealistic. It's possible. I know people that can get it. I know people that will get it. But when I speak to them, they're not telling me like it's a given.
Yeah, exactly. And there are different type of
not,
investor too, because I think that the type of investor you have to know the same point that we brought up before. You have to know the rules, right? You have to know how the queue works and the circuit breaker rule. You have to know maybe one stock can't get you there, so you have to be like, all right, these three stocks can cumulatively have to get you there, and so on. And then at what point do you decide to exit this one? So it takes a more experienced and a more involved investor, and that's not necessarily the average person.
That's far from everybody. I used to.
That's like the 1%.
I used to hear people, everybody quotes Warren Buffett, and they tell you where he said, like he spoke about most people and what kind of investments they should be making. So go buy the S&P 500 fund. Right? You get the slow returns of what. But people think he's saying that's the best thing for people. But what he's really saying is most people are not going to do the work that's needed for anything else. Like I know you and what you're not going to look at this stock again. You're not going to check what's going on with this company and whatever, or you don't even know this scenario like that, where this is the kind of return you can get from this kind of thing, or stock splits. It to me are one of them where people hear about it like this thing that makes us print money, and they don't understand how to actually execute the trades around it, so they can go for it. So it's not that, boy, this is what people should be doing, or this is what everybody. This is a prescribed thing for everybody. It's really for most people. There's a level of commitment and work that's needed for it that they just won't be in their lives. And to me, if you feel like you're too busy at work, then you already have a lot of problems in the sense of I need to go and be a trade. I need to go do some day trading, or I need to go for these short-term returns or whatever. If you feel like you cannot allocate a certain level of time and attention to it, then I wouldn't tell you that that's the kind of thing you should be going for.
It's more like lower your expectations because for you, you probably won't be able to get
lower expectations or actually be committed to the things that you need to be doing around that. And that it doesn't happen immediately for most people. It's not that I don't expect that somebody who's new to investing will just be able to just pick up and say, all right, I know exactly what stock split works because I can go and check it. Sometimes they don't even know where they're looking or what they should be looking for around yet. They're not really familiar with the trading or anything like that. So there's a lot that goes into that. Yeah, but I think that stock split one. Yeah, man. I found that people come to me and say, I want to take part in the stock split. And then when I explain what needs to happen, I even explain sometimes. I run through the dates, what you should be looking for, and then even truly explain. It also doesn't mean that this thing will happen like that. It doesn't mean the price is going to fly. It doesn't. You could be at the point where the price already move up.
Yeah.
Or where the point of danger is because T+1 used to be T+2. That kind of thing. There's a lot that goes into these things that people just take for granted. So the stock didn't move up when this thing split. So how do I get some of that split money this time?
Yeah, and they probably never really even read the rules or even so
they don't even really sometimes know what the stock split is. I've seen some mistakes over the years
I think
like
for me, I use a lot of, so while the rules, yes, I understand some of them. I wouldn't say all of them, but if I'm sometimes, I'll need a refresher on the dates and so on. But I think the easiest thing is even to look historically.
Yes.
I think that because if you don't know
it's sometimes
about
like
a
what
stock
actually
split,
happened.
what happened? Yeah.
We hear all
What
the time
happened?
around dividends. When a dividend announced, the price will go fly. No, some of
Not
dividends announced and
necessarily.
the price don't fly. So what you mean, right?
Some they even dropped because maybe the dividends
Exactly.
wasn't
Just
what they
It's what the
expected.
market expected.
Yeah.
or just somebody else never even actually. People just never actually factor the dividends into a part of their plan around that stock. So dividend announced, I never change the price or rise.
Real. Yeah, we just
I
did
think,
an episode on dividends, so yeah.
I think one of the things interesting that you mentioned about the stock split, like most people don't realize that, hey, if you're doing this play, like you need to buy before it's not even confirmed it's a split. Like, you realize that it could just not split, like it could look like it's gonna split, like something like Palace.
Think about that. That is well within, like a 75, 30, 60% investor. It's at what point of confirmation do you need to be certain? If you get up and say, all right, dividend is announced or a stock split is announced as a meeting to consider it, doesn't actually mean that thing is going to go through. So you're going to be, if you're investing ahead of that, you're investing you're investing with the uncertainty of that event happening, and you have to understand that if it doesn't go through, then maybe the event that you're looking out for doesn't necessarily that you're looking out for your profit points are wrong. If it's no longer, if it's not confirmed at the meeting, the meeting happens and we're not doing it, then you might be at a point where everybody else with you was excited for this next thing, and they were buying it up, or maybe there were trades at a certain price that you got in on. To you it was, that's a good price to get it at. But no, everybody got at that price or lower than you get up and say, okay, I don't care anymore. What happens? Right? You have less certainty around the event. You're tying your profit. What happens though? Right? So then, we find that the more certainty you get, then the less profit there is in the thing, right? Because you're at the point where everybody joined the dance now.
Yeah, everybody.
I even think an interesting point, like if you think about it. So say you had a session with a client or something, and then they were expecting, say, a stock split to be announced and it was being considered at the meeting. The stock flew up 20-30% on leading up that week or so. And then they say, hey, we're not gonna declare a stock split. The stock then say halts back down like 30% or something. It's like, I was even thinking about those two different types of people. So there's a person who is very, very serious about this, and there's a person who's kind of like saying they want the higher return, but they're not really serious about this.
The things happen to them.
Yeah. But then you mentioned a situation like that. This goes back to even a point I want to talk about more, which is like portfolio management. You have to then process that data and say, wait, okay, what do I do? Do I sell? Because there are times where maybe you should just sell, walk away, go do something else. Or there's times where you actually could buy. You could buy and be like, wait, this is now turning into a new opportunity, because if people are like scared, they may sell this down at like 30%.
We're back to basics now. It went to $4. It was a $2 stock. It was a $3 stock. It went to $4 and fell to $2. Maybe $2 it was fine to go back to $3, right? I think people very binary at opportunity in the market. The last Brick Talk was in the nature of opportunity. So this kind of thing was exactly what we're talking about. Just it doesn't exactly. Sometimes the quote unquote bad thing isn't necessarily a terrible. It might just be an opportunity, because everybody else might see it as a bad thing, but you're looking at a different timeline, or you're just even looking at the thing as it is, and you're like, it's actually not a bad thing, but the sentiment around it is, boy, it's rough, and then you can weigh that in and work with it. I see so often this something just looks bad to a lot of people because an event happened. The event is actually bad, but this company is not disappearing tomorrow, and this thing that they're going through is a hump in the road. And when that's done now, back to basics. The company is going to go back to regular operation, and this point where it's just trading at quote unquote too low is just a time for you to be buying.
Yeah, I think the market is
Randy
showing
and
that a lot.
Dolphins Cove other day.
Yeah.
Everybody saw it down because boy, the thing gone bankrupt. And there was more than one point where that was the news around that was so bad that people were saying that then you see the price goes back up. And yeah,
I was even
more
thinking
than one
about
opportunities for people in that one thing.
Yeah,
There are
think about
multiple
broilers.
opportunities in
I don't
Dolphins.
think
NCB.
opportunity there is done. I think there is there are things around that could.
Wait, which one are we? Sorry, are we
Dolphin
talking about
Cove.
broilers or
was saying both.
definitely.
It's funny. So I was thinking about broilers. So when I started the point, I was thinking about broilers.
Okay.
But
Okay.
I just didn't say it. Dolphins Cove. But I'm looking at broilers as they are, and boy, where is ending with them because the reports that we do whatever, and the money look like it now. We say there is no point. There's no recovery for this event in terms of the money getting it back.
Yeah.
That's what I said, right? So imagine that sounds bad to a lot of people. Chicken now go stop. KFC goes to them thing where they and everybody go like Jesus come back.
Yeah.
It's a bad point. Like, the thing they're going through is actually not nice, and it's actually bad for the company. I don't think this is the end of. I don't think this is the thing that kills the company. I think there's a point where they go back to. There's a point where they go back to something that's great happening for them, right?
Agreed.
Regular operation for them was great. I don't think this thing ends that. So opportunity.
Yeah. So it's
you have to be willing to say to yourself, all right, I know the sentiment, because sentiment is a real thing in the market. It can hold you in something. Your profit point can be delayed because nobody else want to buy with you, right? Or something might be good, and because something else is bad, nobody else want to deal with that company right now. So you have to really get up and say, all right, am I willing to sit through those times? And sometimes, am I willing to sit through, how long am I willing to sit through it and all of that? And when the better day will come and people actually look at it in a good light again.
Yeah. But for me, those are the best kind of opportunities. Because you can get in early and get in a lot of units as well.
Exactly. You can build a lot. You can make a lot of money around that because you're at a point where everybody's willing to sell it for too little in your.
Yeah, because even this broilers point, I mean, I haven't really done a lot of looking at broilers actively. I've just seen the stock price fall. It was, I think, trading around $35, and now it's gotten to maybe $24 or something like that. Yeah. And it's funny because we did an episode on this, Preston, on broilers before we did our episode on with Randy. We spoke about broilers in such a positive light, and then this happens. So as you say, imagine the company itself.
Saying, those guys were so wrong.
Yeah, yeah, exactly. And we're probably smiling like, yo,
exactly.
This is like a time machine because the company's prices, they haven't been at this price for so long.
Yep.
This is literally a time machine. This has brought us way back.
Big thing is you have to stick with the binary thinking. It's not either or either. It's not thing that it's like what am I actually going for? And what about this thing can give me that?
Yeah. Literally, these are COVID prices actually. Yeah.
But think about COVID. The world ended with COVID, and we all made so much money just on. Wait, this thing. Either the thing you think it's affecting in the way you think it's affecting it, that's not true. Or, okay, they're taking an actual impact from COVID. But COVID is not going to last forever. If you really think that, then boy, investing might not be a happy time for you. But
yeah.
If you come with optimism and you realize, if you really realize, okay, this thing must get sorted at some point. The world is not ending here. And if the world ends, then the money in the market never actually matters.
Yeah. So true. Oh, that's actually hilarious. No, you're so right still. And we thought the same. I thought the same thing too, because when COVID happened, there's a stock that I was looking at during COVID, because everyone is saying yes, doom and gloom, market down and so on. But you could see certain companies taking advantage of the situation, with people not moving, people prefer to do more online shopping, those kind of things. So we're looking at like Mealpack, and we're saying, Mealpack hit like a low of $1, like 30s, I remember during COVID. And I just became I became an intern somewhere in the summer when it started moving up to closer to like $2. And I said, you know what? I put my first paycheck, I put like a little bag
Straight to it,
into mail pack. Yeah, man, straight into mail pack at $2. I waited a good while, you know, I think it was at $2.20. Sometime during internship, I was buying at $2.20 or so. And I said, all right, Christmas time coming up now. Black Friday, yeah, I have to buy presents for my parents and so on. I'm not using mail pack, but there are people that definitely use mail pack. So you know, you're just waiting and waiting, and you see the stock price starting to move.
A big
One
deal
day, I
for me.
remember it jumped to like $3, and at that point, I was just like, "Yeah, man, this stocks thing makes sense. This makes sense because the world not done, and people still
The big
use the
point for
company."
me at the time was tourism.
Tourism.
People in feel because nobody now flying Dolphin Cove and CPJ were the
Yeah.
big money makers for me coming out of it, because when tourism start bounce back, it was wow, these guys are making so much money. When in reality is, oh, they weren't because nobody was here. So now they have to. Then you start making money. Remember CPJ saying the boxes and the bucket deals and well, you know, scraping together and say, boy, I just inventory out and we need to get them off.
Yeah.
We're not actually make no good money also. I say, yeah, man, price though.
My time. Yeah.
Yeah, they were making losses. They were making proper losses back then.
Proper losses. And then you see those flight numbers in the airport start going up and you're watching it. And you say, yeah, man, you see all the big tourism reports and say, all right.
Yeah. People don't even know that you can actually look at those numbers.
But
like the
all the
flight
things
data.
are public, you know, and people refuse to look at them.
Yeah.
All the laws are public. So there's so much gems in the laws and how companies have to operate that they give you, they really just outline sometimes, oh, this company has to do that thing. And that thing, what they're going to do, or they're going to have to do it in a way that works against them or for them, and you have to be the one to look for that. And you'll find it's the hearsay and the other, what I guess, you know, the oh boy, this is so bad about this thing. It becomes the news. You know, everybody starts talking about that very heavily and whatever. And then you're reading and you're like, but everything good.
Yeah.
You asked earlier about big deal times for, like, you know, what was a big thing there for you for me in the market, and I really think MJE. MJE, and I had gotten on MIL MJE, and I had gotten on it early because I remember I was calling it MGEL because it said MJEL. I remember it was an RGR.
What happened at that time? This was before me and
this was like they gave you a dividend.
I want everybody to hear.
So yeah, there was a dividend in specie, and nobody was seen it before. But maybe at a meeting, and I didn't even look at the meeting notes before very strongly. I skimmed them over, but then RGR had put out an article, just MJEL, and they were speaking about what Mayberry was going to be doing for this new person. I don't remember if they said dividend speech exactly at the time, but when I saw it, I was like, so Mayberry's packaging their portfolio together, and they're going to give it to thing there. And
list it on the market.
Exactly how this thing going to work. And I was like, that's a money maker. And so that was a couple months before. That was the same year I'd gone to Mayberry. That was a couple months before I'd gone there. And I saw that, I was like, yeah, I'm going to sink a lot of money to MIL. And I was speaking to people at the office around it. I said, boy, I don't know, you know, because MIL, the people still don't forget him for them IPO and how well, you know, the price went down and it doesn't really trade at enough and just it's bad. I was like, when I heard that, you know, I was like, but I mean, I can get a lot.
Yeah.
It's a cheap price though. And I went for it. And I remember MIL went from
I think they were giving out a dividend in specie, right?
So what they did, they gave out a dividend
of MJE shares.
So 10% of MJE shares would be given to
MIL shareholders.
And it would be equal amounts. So if you own MJE, if you own MIL, they didn't pen this out, by the way.
It was 1 to 1?
It was 1 to a 10th. So they were splitting, so MJE and MIL would have the same amount of shares. Because you're getting 10% of MJE shares as a dividend. And they didn't spell this out for people. So they didn't. So I remember the conversation me and Randy were having with each other. Was in a group together, a smaller group, and we were talking. And I feel like me and him were seeing the vision. Say, oh, this thing has to be. They're not giving you like. Imagine giving me a dividend for a company that's not listed. So I get a dividend, and I can't do anything with the company. I can't trade that company. So our very next point was that thing must IPO.
Yeah.
But no, it was really we don't really see like you guys do. And I see myself. I was buying it here for 580, 576, 581. I was getting units because I know say dividend going to come out. The time for the dividend is going to reach, and that's going to be a hot time because people are going to run in and try to get for the dividend.
Could it set a record date?
Set a record date. So
this is a short time period.
That was my first point of okay, great, and they're going to IPO it. So I'm going to have units in an IPO before the IPO actually comes to market.
It's a reserve pool.
And I was also looking at what they're going to IPO it. So this stock portfolio is going to get money to buy more stock. And what are they actually doing with these things? And I remember SVL, they had those change up how they're accounting for the companies at the time for the portfolio in the thing there. And I was looking at, okay, how much money will they actually be making from whatever moves they make? So, and I was seeing, all right, cool. Based on IFRS 9, then they have to report XYZ profit when anything moves. So you could check and say, all right, these movements mean MJE will book this big profit. So, and I was saying to myself, MJE will be the thing on MIL's books that's showing big profit. So MIL would be great to buy. So it was a good chain of money I made that year just on MIL, MJE, and all the moves they made that year. And I was just breaking it. Yeah. And I remember going to Mayberry and talking about them, and I tell me, no, you don't really see that way then. It wasn't a big thing. Like, yeah, no, I don't think so. It's that big thing. And I was like, well, I'm making so much already. I thought,
yeah.
And I kept showing it that, yo, really? Oh, wow. And I was like, yeah, man. So I think that was a big time for me, a big deal for me.
Nice.
You know what year that was?
That is 2018. That's when I finally hit $1 million.
Okay, nice. Yeah. That is it. Yeah. Those kind of moves will definitely imprint on you for the long term, yo. Like, I just heard about the whole MIL MJE stuff. I wasn't investing at the time, but sounds like have we had a dividend in specie since? I think Sepra did something like that with
Sepra did it.
Eplis shares.
It was no C2. It was the CPFV shares.
Yeah, CPFV. Sorry, yeah.
Also, something else. So when I saw lumber and blue power,
it's
the MJE all over again.
Yeah.
Wow.
Yeah, that was literally MJE MIL all over again for real.
Because lumber
I read about
two
it.
companies.
Yeah, Blue Power owned lumber at the time, and they're basically
lumber was a money maker and all that. So to me, that was banking time again. Let's get on this one.
Yeah, good times. Yeah, I remember that one for sure. Go ahead.
So you spoke about like how a client will come to you, and usually what they'll say, I guess they'll give you an amount of money. They'll say, okay,
funny, typically, I find that I have to be asking a lot because a lot of people come to investing and they're not necessarily sure where they want to go. They have very vague ideas of what should be happening or what they should be doing. But a lot of people hear that, oh, I should be investing, so I'm going to take my money seriously now. So let's get something going. So what I have to then ask them is, what's your goal? What exactly are you investing? What are you investing for? And it will kind of flesh out how much money I don't say it like that. It's not how much money you want to make. It's a reverse engineer scenario. So what are you investing for? Then you hear pension. You hear, I'll make a house deposit. I want to buy a car in XYZ. I want to deposit for it. So how much money we actually need at whatever time? And so then it's, okay, well, your timeline is XYZ, and this is the amount of money that you want to be making in that time. What are we investing towards it? And then we figure out, does that goal make sense? Are you telling me you need to buy a house in 2 years and you want $5 million deposit, but you have $500,000 now, and you're not going to invest any more money from this point on? So you need 10x your money in 2 years. That kind of growth.
Yeah.
Mm.
You'll tell them as it is, like that.
Oh, yeah, I'll tell them. Yeah, we probably need to be up in that, and we do a lot of breaking down of what you will be doing, how we're going to approach it, and how realistic that goal actually is. Yeah, especially for the approach you're going to be taking. Yeah.
So how do you even, for example, handle things like picking how many stocks that you recommend to the person? So I'm guessing that, for example, be based on the size of the portfolio,
and largely on the person themselves, like their actual experience with investing. You ask like questions like how long you've been investing, what exactly you've been doing with the portfolio, what kind of moves you've been making before. You know, like typically most people know a strong experience with investing. So kind of then you start looking at, all right, for the goal you have in mind, then okay, we might need more stocks in the portfolio. Just on you are not in a position where you can be looking at a lot of stuff. You can be looking at a small amount of stock in your portfolio, because maybe about a certain amount of money you have. Then if you get in there, so then getting out might not be so easy for you if it's a lot of money all in one stock. And that also is a big deal too, in terms that people don't look at is what exactly does your end game look like? Are you building a portfolio that pays you dividends 20 years on the line? Or are you building a portfolio that you want to sell all your stocks 20 years on the line, to have cash in hand to maybe buy a bond and it pays you regular payments? Yeah.
You also talk about bonds too? You also discuss bonds as well?
I do talk about bonds, but I find, to me, to be honest, I don't think there's much to talk about bonds. Right? Bonds kind of present themselves as they are, in the sense of they tell you what level of risk the thing you're investing is, and they tell you what to expect from them in terms of the payments, how regular they are and whatever. So typically I find that for bonds, it's okay, people are looking for a certain level of income from a certain amount of money in a certain time, and bonds are available at this time that can fit that income level. So you want to make 7% a year for the next 5 years, then use a bond out there that can do that, and look at the risk of it, and are you comfortable in whatever. And of course, I do have to run into the bond scenario. Yeah, bonds, we talk about how, people often say bonds are really not risky, low risk or whatever, but the reality is we're lending money. Things can happen for that company.
Look at what's happening now
with NCB.
So what can happen for you is that if that company changes, then you might be in a position where you're not getting your payments or you're not getting your principal. So and I think that scares people, because because the expectation from bonds is because it's a safe, man.
It's so
safe. Hear that, it don't actually work like that.
Most of the time, think about it, you're lending money to a company, so you can own equity in that company. But if that company does poorly, assets may be sold and it still owes people money. So
that's also money gone.
Yeah, because we've seen things like digital bonds where
digital was a big thing. I had a lot of clients that were coming to me at the time in 2022, and it was, we invested in digital bonds, and my broker is now telling me I either have to do the restructuring and get a worse looking situation, meaning my money must get cut at some point, or we don't do it and we don't get any money. So I say you're already in there, right?
Yeah. And usually the typical bond investor, in my opinion, is investing a lot of money. Like it's not like a 50K, 100K, millions.
They do it because they're not try to earn none else.
Yeah.
Lose some money every now and every whenever, and I go on this and I'm looking at figuring out. I find people that are in equity put more assessment on what's going on for this company.
Yeah. Agreed.
The bonds is, I give these guys some money, I have some bonds. I don't know what bonds they are, and is it gonna work out or not? I mean, not even is it gonna work out or not. Just give me money every year, never, and redemption time come, then let's go.
Get back everything, yeah.
Like, you
and
remember a client called me saying she had the JMB preference shares that got extended recently. She was very upset because she had really put it down to get the money back at that time. And it was years ago. So but now she's hearing, like, you're not getting anything back. You have to either sell this thing and hope for all the best for you selling those preference shares. extension. So it's wait a while or get it sold. And I forget, we didn't even get everything sold. It was we found people that could buy some of it.
Yeah, I get that.
And wanted to for whatever. So it fit somebody else's goal, so they'll get it. But at the end of the day, she didn't get all the money at the time because extension.
Yeah. Yeah, it's good to have these kind of conversations because a lot of people don't know the reality of even preference shares, bonds, and so on. People think it's very, very safe, very low risk, and so on. But if you're not evaluating the company, anything can play.
And I even find like you get a bond, you hear about a bond. It's almost like you ask for the result. You ask for, yo, give me something on the company, and no, we don't have that. Or I even found so some ones in the past, it was okay. Show him if he has a certain amount of money coming to this thing. We're not saying the monkey $10,000 money to people. So 10,000 US, nah, bro. I'm not saying no documents. You want the banner or not? I've seen that kind of attitude before.
Wow.
Yeah,
I get that.
That's messed up.
Yeah.
You've said something a few times about risk, like equities, bonds, and stuff. And you said that you think that you essentially view risk differently, I guess, compared to the standard industry people. How exactly do you view risk differently than most people?
So risk, as I said in a way earlier, I don't think of things as deterministic versus stochastic. Things are not given. This is not very static. There isn't this thing is likely to give XYZ money or lose me XYZ money. There's a lot of things that go into that don't make it makes a very hard assessment on, boy, can you truly know all the things that can go wrong in the ways they can go wrong? I'm sorry, but you can't. All right? It's like we often, like, in a lot of times in the industry, you find like the people that do a lot of the calculations, the research guys, they give you, okay, this stock was volatile in this way for the last year or 5, right? So the risk on this is we did a curve and whatever, and boy, the stock is risky because it can only because over the last 5 years, it traded like this, right? If it was stable, then boy, it might be better for you, because less risk, it doesn't move as much. And they think of that's not actual risk, right? It's I knew what happened for the last 5 years, so I can tell you what's going to happen for the next 5. That's just not how anything works, right? So I don't think of things in that way. I think I look at a lot of things and how they can go wrong. But I don't think I've ever said to myself, I have an actual answer directly where I feel really certain around, oh, this is the way this can go wrong, and this is the level of wrong it can go in terms of losses for you. So I think that's where that idea comes from for me. Risk is what can go wrong, and it's also how the level that things can. So your risk around any say you buy a stock, how far can it go down? Well, it can go down more than any number you give me can go worse, right? And it's just stopping at 1 cent. But then you have this, and that's this isn't zero, right? It's actually not zero, but it's also you're in a more risky position at the end of the day. So measuring that. What I typically do is like you have to measure your level of prediction around where things can go wrong. So it's in the case I buy this stock, I buy 100,000 units, but I look at the queue and I realize that if I were to sell 100,000 units in this stock, then it would require me to sell down 20% just to leave all at once. That's not necessarily. That's not static in the sense of, boy, maybe they can leave over 5 days, so it might not be that case every single time, but there are cases where something goes wrong, where there's nobody buying, right? Or if you identify the point, if you're identifying it before everybody else does, then you're leaving, then you might have an easier time leaving, things like that. So
depending on the time period too, because if it's not the point where everyone is meds in the stock and the demand is there for the stock,
that's also
you have to assess, are you willing to, how long are you willing to sit in this? before something happens.
And I think
Right?
that catches a lot of people up, where they'll make a big investment in a stock and they won't really consider that kind of thing happening. Like, say you buy a good amount of units in a stock, 1 million units in a stock, right? That doesn't trade super often. And what you're waiting on, you're looking at the stock and you're not really seeing a strong buy queue. So it's not like you can get up and sell 1 million units all at once. So what you're waiting on as your event for your exit, where maybe things start looking good, a good dividend that's going to blow up everybody's mind, or they have an acquisition coming that you speculated on, and you're researching around that, or maybe they gave some hints, and you're getting that point. If we don't get to that point, then you're kind of stuck in a way, right? Because how you get up and sell, your money coming back to you it's far from given. So that is a risk that people don't consider. I have more money, so I go do this thing, and that to me, that's kind of makes more money more risky in a way. You kind of you're taking bigger investments, so you have more to lose, and your size actually impacts the market in a way that smaller money wouldn't. So that's the risk I think a lot of people don't really think of. They get in and they get a good amount, they go for it, and then there is no real way to navigate in the case where the thing they want takes longer than they want, or it just doesn't happen.
Or even if it happens, the reaction that they expected doesn't happen.
That's a big
to the thing.
That suppose people just don't care as much. Or another funny one, suppose something else is happening at the time that a lot of people care about, so your thing gets drowned out.
Yeah, that can happen. Another IPO drop.
Off
of a sale, election, all that stuff. Yeah.
And you find that your thing doesn't get any eyes.
Yeah, that's a real fear. And I think
sometimes you even watch smaller money get the gain you wanted on this thing, and you would have said, "Boy, I can only leave with a small piece side." Yeah, I think bigger portfolios do have to. I think just you have more to manage. You have a lot more to deal with than a small portfolio. So you you're walking in at a point of you already have certain risks that other people don't have, and you have to manage that. And I think other people that blindsides them.
Yeah, that's true. Yeah. That's why it's always so important for more people to come in the market. I think it can only be good when more investors actually start investing.
We've seen what queues look like now versus early days. Queues were not so laden. It was not the case.
That's very true. Yeah, they were scanty back in the day. That's so true. Yeah, they do look completely different. I think for me, on that same point though, trying to remember exactly my point. I think I lost it, but I was agreeing with you when you're talking about buying and holding and the thing doesn't happen. And same thing. So reality for me, it's happened to me before where, I'll get a decent amount of units in a stock, and I'm there waiting and waiting, and nothing is happening, but you see the signs, you can see the signs, and no one else is messing it. But, there's so many other opportunities. It's just much harder for me to, there was a point where I realized it was much harder for me to time the market because, things kept getting delayed. And it's not even just like one-off things, like it's just financial results, specific corporate actions that you're waiting on. A lot of things will just get delayed, and that's a part of the risk. You have to say, all right, suppose this doesn't happen in this timeline. Okay, maybe it'll happen in the next 6 months. What happens if it in the next 6 months that don't happen as well? And we're seeing that too. So like imagine, give you an example, find something on the market. Dollar and Ultra, right? People were speculating when Ultra would list, and there are a bunch of articles and so on. Now we're not seeing anything. There's no chatter about Dollar.
I can like last M and last D and the merger.
And the merger, all no. And the price has fallen, I don't know if, let me see if I can find last
nice rise and then stagnation and so. When that happens, just all right, cool. Other people are waiting on this thing, and then maybe they say, "I'm not waiting anymore." And so, and other people are in profit as well. So they're more, they're more than fine leaving because I made some money anyway.
Yeah,
so I can leave.
Look at this. Last time was trading as high as $8. I'm seeing $8 here, and now it's gone all the way almost $9, and now it's dropped right back down. What is a time machine again? $6.
Yeah, I remember I was meds into.
And did they say anything about it recently?
Buy.
I'm sure
Not
they
that
said
I
something about it
know.
recently.
They paid a dividend. That's the.
I don't think so. I think I checked the annual report.
I think there was no man. I don't think they ever said anything very strongly in the reports. I think there was articles.
Yeah, there were
article came out recently with some reference to it. Or maybe I'm misremembering. Well, I feel like that's the case.
No, I want to see. That's what I'm looking up now. Let me see. But yeah, I think like a point that you're touching on that resonates with me is just the whole thing of like managing your portfolio, you know, because it's hard. Sometimes, you know, it's like, okay, I have to buy this thing. And like I did an analysis on a timeline, and I had a rough timeline in mind, and I was like, hey, at the conservative timeline, it looks good. And even at a delayed timeline, the return that I'm looking at, I was like, hey, this is actually pretty good. Obviously, I wouldn't want to wait longer to get the return. So say it could happen in 6 months versus a year. I'd want it to happen in the 6 months. I'm not waiting for the year. I just want it.
It's always better.
Yeah, but then there were some delays with it. And like I was even mentioning like recently, I was like, yo, it's almost like gone back down to the price that I had started buying it at. And I wish I had like more cash. Not just that, it's more I wish I had cash now, because like I'm looking at it and I'm like, hey, units are trading.
Say the profit because the profit is insurance.
Go again?
Wait, repeat.
I said profit because the profit is insurance. It is something you have in your money.
That you're right.
If you wanted 20% and you're sitting on 10 for a while, then at least anything goes wrong, you could have left that. You can leave at 10. You reevaluate something, because suppose you're at 20, you're 10 now, but you see another opportunity that gives you another 10, and you're even more certain around the movement to that 10 than the thing you're already in. Then you can always leave at 10 and go there. Suppose you saw that he never moved and he's back down now. And the thing is, say they're at 10, but the most you get from it is 10. So you have to evaluate, okay, do I go to that 10, which is, I still feel more sure about it, or I wait for this 20? Because even then, like your certainty at 20 is going to be different from your certainty at 10. Like the thing that you want to be, you love if you're as certain as about a 10% as a 20%, because then immediately you go to the 20%, right? But in the case where, okay, I want this 20, say 80% certain. Let's say that 10, I'm 95% certain. You really have to say to yourself now, all right, which one matters to me more? The certainty around the 80, around the 10, the 20, at 80%, is that enough for me to sit down and wait for it? Or do I get up and say, go for that 10, because boy, that 10 is, to me, is the likelihood of it happening is so strong.
Yeah.
The thing about portfolio management more than anything is the decisions you make, and you have to how often you make them and your willingness to make them. I think that is really driving. Before this, I was saying to you guys that it's really hard for me to give like strong tips on portfolio management that don't sound like all the other tips you've heard on portfolio management, right? Because like, when you're doing it, it's all right. I need to do this because I'm looking for this, but there's something else that I need to be. There's something else that I can be doing in the time, and I have to decide if I'm more sure about that thing than this thing, and that the payoff for that thing, despite my certainty, is it worth it to go there? Because again, you might say the 10 and the 20. It's very easy to go for it's much easier to go for the 10, and you say, okay, I guarantee that return more than so, but I just wasn't looking for 10 though.
Yeah.
It's a real hard thing in the moment and doing it.
Because like there are times where I've made a decision. I say, okay, I'm going to sell this thing and I'm going to go into this other thing. There are times when I get it right and it was the right move. I made my gain. There's times where I don't get it right, and maybe if I had stayed in that thing, you know, I would have just got my gain. So it was interesting. As I said, I held down. I was like, I know my strategy. I have my other stuff working on. It's not all in there, but I did look at that, and I guess I was like, wow, imagine because there are other things that I guess I could have put that money in and then come back now and then see the volumes that I want trading. I was just like, wow.
That's also a strong thing, because we look at the market so much, we see so much things happening. So we very often beat ourselves on that. Well, I could have cut and come back. I could have gotten that money, and I'll be back here with more money.
Yeah. It was hard to see that sometimes, but I don't know. We move, yo.
It's like opportunity cost, because you feel like you miss out on every single good opportunity that's out there, and you're like, yo, should I still stick with this? And there's always it's happened to me before where I leave the stock, I jump into this thing, and I jump in close to the peak, and I'm just like, geez, stay on. Why you never just stay patient? Like it always goes back to, why did you buy it? Same wise. Why did you buy the stock in the first place? Okay, yes, the timelines might have been, escalated, but is there still that possibility? Has anything else changed with the company?
That's very hard to weigh, in terms of, is there still that possibility? Because sometimes you know it, but you're still vexed because I've been here for so long waiting.
And you see Preston a tweet about how we make whatever one RPL, or and you start feel away because you're like,
can you see the RPL too and never take it?
I'm never take it come this, so yeah, it's tough, man. It's very, very tough.
I used to balance a table with margin, but I feel the margin rates and it's only too ugly right now, and yes, I'm not really a big fan there of taking.
I wonder what the margin rates are now.
I'm hearing 15s, bro.
Yeah, I think Neighbor is 15,
and Neighbor is the guy, right? So.
Maybe is the guy.
Everybody's like, I think the hosts are just generally hesitant around giving anything right now. So it's I don't think we're not in the environment right now for that. Where you find as agile move you can make. Where do you get more money, right? Where do you get more money?
But you could even touch on leverage, because I think a lot of people have seen bad examples, I guess, especially like now. Maybe people might say, oh, because of what's happening, that's a bad example of leverage.
I find that people typically, that's how they work. They get a great example when everything was good, and you hear Warren Buffett examples of leverage and all those other guys, right? It's great. Leverage is this thing you definitely should be doing, and you work with it and whatever. And then now you hear a bad example, and then suddenly it's a demon. That's why you should never do this, It just doesn't work like that, right? It's take what you can manage. Sometimes you can't, and the truth is, sometimes you don't know what you can manage, in the sense of things can change. So your level of predictability around that change is a big deal. Meaning, all right, if you lose your job, then you can't make the payments anymore. Kind of situation, right? Then you're down to zero. What do you do then? All right, like, do you actually have contingencies around? Do you have money you can live on in the meanwhile, or money that you can use to pay down that in the meanwhile? You have something, or maybe even selling some of the portfolio. Like, that can be something you look at. If when you check it, you don't really have that thing going, maybe then you have to reevaluate. Then, maybe that level of leverage just isn't for me right now, right? So yeah, there's a lot that goes into it. And a lot of it is very, very, very personal, which is just portfolio. Which is just your portfolio. I'm investing generally. People really do think that people love making things into absolutes. So they like find a box. But I think it's easy to ship. It's easy to sell. If I can frame this in this way, and then I have a story to tell. Then I have something I can push out and people can hear it. Versus if I were to really get up and say, boy, it worked for Thea and Matthew and Randy in very different ways. And like very different ways. Like, how do I then give a listen? All right, I don't have much to say across these three very different scenarios.
Right.
I think it's really just a matter of how much leverage you use and what the asset is. So it's like, if you're really serious about like finance investing, most people who have got to whatever point you might be looking towards have used leverage in some way. There's some who maybe go 100% or more, but there's some who maybe just say, hey, 5% is fine for them.
20. Yep.
Yeah.
Leverage really is the difference maker in business. That's why businesses take loans. It's not because they just want to borrow money. It's, I need to get, like, it's the money on top of money situation. If I can get 50% profit on this thing I'm doing, if I can borrow some money, then as long as all the money I make from that thing goes back direct to my promoting there. So I'm making 50% profit on my $100. If I can borrow 50 from Matthew, then it's $75. I make $75 and I pay Matthew back in $50, and I made up from my pocket. I took $100 and I made 75% return on it.
Yeah.
Of course, I will pay Matthew some money, so maybe I make 70 because Matthew let me do 50 at 10%, so I give him $5 back too. But end of the day, it's money on top of this is the money that I'm actually risking from my pocket. And to some degree, you are risking Matthew's money when you do investing, right? So you're actually risking 150. But at the end of the day, you're a stagger in how we're going to pay it back on all of that. And at the end of the day, yes, there's money on top of the money that came out of your pocket. You put to work with somebody else's money, and when you give them back, then the return is multiplied by X amount. Yeah. It's really where you see the gain really go past.
Yeah, all you have to do is just beat the return.
The bank isn't holding your money because them like you, right? They're holding your money so they can make some money on top of it and give you the chump change that you see in the thing there, the savings account.
Funny that you touch on the bank too, because I mean, you can even take that leverage from an organizational standpoint or a company standpoint, where you see them use leverage very differently. Like I see banks use leverage to, kick the can, the metaphorical can down the road, meaning they have money that they need to pay now. They have a loan that they need to pay right away. So, they take out a bond, they borrow money. Yeah, they borrow money from people, pay that off. And with, they have to pay this new loan now, back in maybe like 4 or 5 years or something like that. And we'll figure it out at that point. But right now, we need to just
we are figuring it out as we go along. I'm already trying to figure it out now. So I'm just extending the time of figuring it out.
Exactly.
I'm giving myself more time with that money to do something with.
Exactly. So interesting lessons. Preston, anything else you want to ask Danhai? Because Danhai, you're on the Limitless podcast, and for all our guests, we love to ask just about the market, generally speaking, in terms of stocks. And, we want you to just talk to us about, some of the companies that you like, whether for good or for bad. So I'm not saying, you have to tell me.
I don't often like things for bad. So
I mean, I like things for bad because, well, it depends on the bad. If there's an opportunity there,
same thing. Okay.
Yeah. Same thing, like the same dolphin code
or the Jamaica broilers. That was broilers immediately in my mind. They're not necessarily going through a good time right now, but I don't think this is the end of it. I think they're building the business, and it's going to get to a point where, as they said, 24. No way.
Yeah, no way. Right?
They're very strong at 35.
And look who owns a lot of broilers. I don't see him like that. That man don't like lose money, So
exactly.
Yeah. But outside of the stocks we discussed, talk to us about maybe one or two stocks that you seem to like on the market.
I have two off the top of my head. Select MD, Select F, and I like them because what they were before. They were the view of them. I think a lot of it still is people. It's the companies that I just cannot get the value that you tell me I'm getting from them. We tell you that the portfolio is $1.50, $1.40 per share. Every day you sign into your account, it's 80 cents. People vex, go to AGM and say, why my stock now go up? And the management say, I'm not trading the stock. I can't bring the stock up, right? I can just manage the company and buy the shares, and a very passive way. We're not actually going back and forth and looking for the profit in where it is. I'm buying this set of companies, putting X amount of money towards it, and because we think buying them is a good return, right?
Yeah.
And they make good returns in terms of the value. And the NAV is 122 for Select MD, 54 cents for Select F. And they're both trading 80 cents for Select MD and 45 cents for Select F. And look at MJ, my money J to tell me the discount.
The discount.
52% discount. So you're buying Select MD at 52% less than the value that it actually is.
Mm-hmm.
And select F, 20% of the 20% less value than what it actually is. And what they're doing now, they're converting the companies into unit trusts. So how unit trusts work is we actually trade on the value of the company. So trading meaning if you buy into the unit trust, you're buying at the NAV, which is where the value is, and you pay some fees. Same with select MD, select F. They're moving away from the current value, the current model, where it's the value that you can trade and I can buy and sell the thing for is based on where everybody else trades it. So if them don't want to buy this thing for 120, then so you go and buy it for 80. That's how stocks work. But now what you can see is that they're moving to unit trust. So they have some meetings to decide that. So this is the point of less certainty where them have to decide and do those things. And we have to get up and say, are they going to actually make that decision and go forward? They gave us some fees or you pay some of the profits, pay some of the profits in taxes and some of the fees that you work with for just managing the fund, right? But to me, that's value. That's something if you get it before that point of conversion and they actually do convert, then I'm buying this thing for the market price, which is 50 and 50 something percent and 20 something percent less than the actual value. And then I'm moving to a point where when they make the unit trust and I redeem it, I'm redeeming it close to the value of the actual portfolio that they tell me it is. So I buy it at 80 and I'm selling it at 122, that kind of thing. So I think I do like what they're doing there personally, because it's something I would buy and make some profit. I have bought some. Yeah, so I think there's profit in it. So yeah, I do like that. And next one, okay, load up a bridging that load of theme stock, because I did mention it, I think Friday, or mentioned it vaguely Friday. Jetcon. Jetcon is no longer the car company. It's come to mind very easily because I mentioned earlier I was going to do second stock about.
Yeah.
They're no longer the car company that they were then, where they used cars and the smaller used car, the Demios and whatever that all the girl them used to have. They're not doing that anymore. They're now moving. They've now moved to new cars, and it's the Chinese car BCAIC, I think the name is.
Yeah.
So they're not selling those cars.
BAIC.
BAIC. I have to put extra C. BCIC, BAIC. So they're moving. They've moved to selling those cars, and the profits have jumped a lot.
Yeah.
A lot. And so as the price of the price of the stock, if you bought it at the start of the year, you'd have made a lot of money between now and then. If you had just bought it, and when they first told us about this move, and if you really believe, again, point of certainty, right? I really think this Chinese car will come and make the money in Jamaica. Right? And you're thinking about, like, if the car sells for 5 mil and them sell 20 of those, it's 100 mil, right? So do you think 20 of those cars can sell in a quarter? And do you think 40 of those cars can sell in a quarter? And then you look at the profitability of that, of those sales. So they've made a lot more profit over the last 2 quarters. And I think if they can keep it up, if they can maintain those sales, do better on those sales, then you look at a very different. They are looking at a very different company from last year and this year, just in what they do and the money they have made since. And if that continues, then money. And I think they're cheap for right now. It's undervalued for the if situation. If do we actually think that can happen and continue?
I said
and
the last
I do
2
not
quarters
think
last year, there were losses.
Yep.
So far these years are profits. These first 2 quarters are profit. Q1, Q2. So if Q3 and Q4 don't even actually have to be that hot, Q4 was I think that might have been the quarter where they were writing off the old inventory. So I think that's why there was
when they do the shift.
I vaguely remember that. My problem, I think, when I was looking at Jetcon, because I was seeing the same transition, it's pretty
liquid.
It wasn't very easy to get. Yeah, it wasn't very easy to get units. Like I think I was looking in the queue.
Think about what we're talking about since here, right? Like that's a risk you have to take. Are you buying this thing now? And do I really believe that in the actual event that I think is going to pass, if it actually comes to pass, It's the market that's excited. It with the price where I want it to, with activity be there at the prices I want. So yeah.
So there were some connected party purchases about just under 272k shares July 9th.
And I mean, check before that, they've had a good amount of buying even before then.
Yeah.
June, buying. So somebody close to the ship to the ship believes in it, right? So.
Let me see.
Yeah, I'm looking through all
St. Andrew Investments. That's Andrew Jackson. Connected to Andrew Jackson. Wide base is there. Oh wow.
Of course.
Oh yeah, no, I think that's
been there for a long
MJE.
time. No,
I think that
wait a second.
Wide base. I think there was like a recent,
No, so wide base recently had something in there with the whole MIL group restructuring into MGL. Mayberry Group Limited from MIL. MIL owned Wide Base, and so what they've changed now is that MGL owns all the things. So they own MJE shares, MIL shares, and Wide Base. Wide Base and MJE were together, I believe, before MJE was split off for its listing. So they just held all their equity in one thing, and then they put the public equity by itself, and Wide Base was a private equity. So yeah,
that's interesting that they switched it out. They sold basically Wide Base bought from MJE or transferred the shares. Like the Jetcon shares.
Yeah, this is in Q.
Probably bought it.
Q1.
Yeah.
Q1 of this year, yeah.
That's interesting. Okay. Jetcon.
Okay. Yeah, something I need to look further into. I was seeing the price movement. Because as you said, like it's very strong price movements from like $1 to almost basically $2 now.
Yeah, there's not that many buys. It's not like something. Once again, it's with cues like this. It's so interesting. Like, I don't know how you guys view it. Like, if you view it the same way as me, it's kind of.
I think you have a good amount of money, Matthew. That's the problem. Because some people are viewing it very differently. A man with 100,000, 10,000. This is money for them. This is good for them.
Yeah. No, but I mean, look at
even think there is a line where if you had gotten millions of units or even 1 million units at the $1 something, the value of that portfolio sees it, and you don't have to sell all at once. This could be your leverage point, because I think that's an interesting part in leverage and portfolio management. When you're taking leverage on a portfolio that has already seen some value increase, then if you take a good amount, a reasonable amount, then what you're actually leveraging is a profit you've made on something so far.
Real. Would you, when you leverage, is it at market price, or can you choose the price that you're basically leveraging?
You can choose how much money to borrow.
Typically at market price, but you think that's the thing. You choose how much money to borrow. So if you say, all right, I want to leverage our $2 stock, I bought that one, so it's double the price of what I bought it at. But in my mind, I'm taking the leverage. So you say they offer 50% leverage on the stock. But what you can be thinking of is, okay, I'm not going to treat it as a $2 stock that I'm taking leverage. I'm going to take 50% leverage at the $1.50 value of the stock in my portfolio. So then, again, you're making some level of safety for yourself. If it falls to 150, then you've already thought of the leverage that you've taken as a 150. So you can, there's a lot of ways in that you can fix your risk.
Yeah.
I think we were having a conversation recently, like on our live, where I was like saying with the select funds one, what I would probably do is buy it and then margin when it's at the lower price and then reinvest the margin in it versus waiting for the deal to go through and then margin in it.
But then that's also the thing about that. You've already thought of that thing as not necessarily it's not necessarily a strong risk for you, because you have some certain points in there. It's the value after conversion. So you're thinking of there is, all right, cool. You have some strong certainty around just buying it and it actually converting. So you're saying to yourself, all right, if I do it at this level, then I don't really actually think there'll come a day within any short period of time where I'm looking at this thing and it's way less than what I bought it for.
Mm-hmm.
You actually you already said, boy, I get in 50% on it when everything works out. So
Mm-hmm.
I can operate in that way.
Mm-hmm. Oh yeah. Mm-hmm. Any others?
I'm gonna try. Man said 2 and I'm gonna ask for more.
Oh boy.
That's true.
Oh boy. I want to be like the people's favorite now, NCB.
NCB, I like it. I'm not buying it right now. I don't actually think it cannot go further. I don't know that. I don't subscribe to that. Boy, it's 30,000. Most can go further. I heard that talk at 60 and 40. I don't think the event. I don't think there's. I don't think the event where the profit from buying here is within my timeline yet, where I need to be buying it now.
Mm-hmm.
I think I can wait some more.
Mm. Yeah.
And if I wait some more, it might be lower. And if it's higher when I buy it, if it can even be higher when I buy it, because whenever whatever is happening wraps up, then if it's at 40, there might be a case for me to say it at 60 or more. I mean, it's not static like that. I'm not looking at the price. I don't have people do that. At that point, we're doing the PE is XYZ, so it must be worth $200. Like, so it don't work like that, right? Like, things will change, and somebody who says somebody could buy from $200. So yeah,
that's true.
I was looking at some timelines. I think there should be a bond meeting about the AIC bond soon. I think there was like a deadline that was posted. It was 10 days. When I count that down,
and I needed people to come in.
It'd be either Monday or Tuesday.
Yeah, I believe so. Tuesday, I think.
Yeah. So I guess even that. Yeah, it's like we've said it's like catching a falling knife.
Yeah, somebody asked that on Brick Talk. What about Shay asked us around thing there, around catching a falling knife. And that's the reality. Because it's low doesn't mean it cannot go low. And there is no because like if I buy it here, I have to be prepared for that possibility. And what do I do? What do I do then? Is it within my plan? Is it something I can sit through? You have to work with all that. Yeah. So no, the people's favorite actually Trans Jamaica though. Everybody loves that stock.
That's the people's favorite. I agree.
To the point where I wonder, like, is it really that? Like, yeah, it's good in what it is. And yeah, sure, dividends are okay and nice, but I think people put a lot on it that necessarily isn't there. But that's not a bad thing in terms of us on the market. That means there's possibility for opportunity if we see how people act, and we can move accordingly.
Yeah.
The results just came out.
Great results, right?
Strong balance sheet and such. Yeah.
And then the Williams fee, like how long we heard it still open?
Man, it's soon come, man. Summer. So,
it's funny. Like even that, like I heard someone where I walk outside, the sun is bright and the heat is hot, and Jam seems to have heard the same thing. So they even said that recently around they still do expect that the manufacturing division and all that, and they also do and they mentioned that QWI. They said something very interesting around it, and I wonder if that could be a move they're making. They said they're not going to. They want to raise money, but they're not going to do it until QWI is back at IPO price. And I said, what would cause it to do that? That could be a very interesting point. If we do see that possibility actually coming out, there might be something that they have in mind for that happening.
There's a significant discount. There's a strong talk because right now the QWI's discount to NAV is 76%.
So I don't. I don't know. I wouldn't personally. I wouldn't get up and say that in a vacuum of, okay, I'm not gonna do this thing until unless like to me like Maronjo when you say something like, I mean like is it that they don't want to raise money when they say that, or is it that they do want to raise money and they have a plan around that?
Yeah.
I don't know.
Yeah. So
Yeah, good question. Because I
someone
mean,
might be
we
hot. They
spoke
might be.
about QWI too on the podcast with Randy when Randy was here.
Yeah,
And
there's
them
strong things there. It's like imagine if
buybacks, a bunch of
buybacks.
stuff.
There's something that's been floated for them for a while, right?
Mm-hmm.
And did the latest resolution have something around that in there, or something that's on
I
buyback?
don't think so. I think they already got. I don't think they needed any more approvals or anything. I don't think there was any mention about buyback. I think it's just like I saw some warrants for the directors to be able to get shares at 150.
You're right.
Mm-hmm.
Why would I buy shares at? Why would I get shares at 150? Why?
Yeah. And it's trading at 60 cents.
Yeah, so I wonder if John Jackson is back in his groove and making a move.
Boy, I don't know.
I hope so. The thing is that I saw a lot of things from him coming up in the market. So I still I'm looking expectantly and say, yo, John, what would they put? What's next?
Yeah.
I wanted to make a move.
Well, you might be waiting on that on access.
Preston. Your question was so funny to me, and the response was even funnier.
I hope we can clip it, bro. I really hope we can clip it and put it in this episode because that question was hilarious.
Good morning. Matthew Preston has a few questions from online. This is from Zoom. Why hasn't QWI considered averaging down on Access Financial given that the shares are trading at a steep discount to your average price?
Next question.
Next question is, for shareholders who are invested at IPO, what's management plan to generate returns that justify the management fees and risk of holding QWI?
Well, I think I answered that in some manner.
How they answered that.
Yeah, next question.
I don't.
I should meme it.
I think they do. On principle, I don't like that. I don't like the limiting of questions in AGMs as much as some people ask a bag of questions that I feel like sometimes you don't need to be asking. Like if you read the reports, like you say you do, but shareholder have a concern. Shareholder asking a question. I own this company.
That's a valid question.
I own this company. You can't tell me say, oh, you can only ask X, Y, Z. Them don't tell my food.
Real.
Them not tell him that when he ask questions. So he own more than me, but I own this company. So I just generally
and this company owns a big chunk of this next company. So you're asking about one of their biggest holdings.
Which
it's their biggest.
It's to a strong degree of we value this company on the share price. This actually affects the business that we're doing. The share price movement. And the thing I'm asking about is that. And now, man, I'm not even only talking about Matthew's scenario. I'm talking about generally. I don't like how it seems to me that shareholders are something to deal with very often.
Yeah.
Let's do the meeting because the last time I have to do it. Let's hurry up and get this through. And I ask question about something I don't want, and so tired enough, brother. Hurry up and shut up. Like that's how it feels. Like no, I don't like that. I don't like the boy can only ask X, Y, Z questions. I feel like there's something terrible legally in after that.
Yeah, I'm pretty sure there should be something legally.
I don't know if there's something in the law that says X, Y, Z, but I feel like, say by the spirit of the law, that's not what that's there for. I mean, we have this thing for that kind of thing generally. You can't tell me say, hey, yo, don't ask. Hey, don't
you're
ask
a public company.
X amount.
Like
you're
otherwise,
a
stay private.
This is what comes with it.
This is your job. You work here.
Yeah.
You're a director of the company. You're an executive of the company for this reason.
You took shareholders' money, right, to be listed and so on. So there are certain things that you have to do.
Why tell me I can't ask more than this? Why tell me I can only have 2 concerns per year?
Per year, right?
Yeah, that's madness.
It was madness. Agreed. 100% agreed. Okay. Boy, Danhai, we've been going for what, 2 hours now?
As usual.
As usual. And it's funny because like even after this, we can still go another 2 hours.
Oh, definitely.
Yeah, that's how we normally are on the Limitless podcast. But thank you so much for coming on the show, Danhai. Guys, if you love this episode, drop a like, hit that subscribe bell, right? And what we'll do is because as I said, this episode is just education only. not financial advice. But if you got value from it, right? And if you want more value, if you want personalized investment advice, just book a consultation with Danhai. We'll drop his website link below. Danhai, any other plugs you want to leave the people with?
Any plugs? Listen to Brick Talk. We have it every Friday on Twitter. Earnings season is our Twitter page, and we have a Twitter space, and you can actually talk to me and my Reggie and Randy. Probably see me on other episodes of Limitless. We have a strong conversation around the market. Pick a topic, and we talk. If you can talk, call in, ask about whatever you want on the market, really, whether or not it's related to the topic, and we'll talk through it. You can hear our insights and our thoughts on whatever it is.
Sounds good. Maybe we should do an episode with them.
Definitely.
But on Brick Talk.
I know that Matthew and Thea know they can always call in and we can have a talk there. So if you want more of this long chatting, then definitely link up there.
For real.
Let's do it. Let's do it. Comment below if that's what you guys want.
Real talk. Thank you guys so much again. And of course, Limitless out.
Peace.